Hi, I'm Bill Blain, strategist here at Shard Capital in London. The big issue facing markets remains the coronavirus, Covid-19. The news we've seen is certainly beginning to develop very, very quickly. There is momentum building as the virus shows up in other towns. We're seeing Italy in lockdown. We're hearing about Korea introducing special measures. And something that must terrify the World Health Organization is the apparent uncontrolled outbreak now facing Iraq. However, the key thing at the moment is for markets to remember that the coronavirus effect is purely economic at this time. It may well be that we do see the virus generate into something more significant and create global fatalities, but the main thing for markets to consider is exactly how serious the global impact on economics is going to be. And it certainly looks like the breakdown in supply chains, the breakdown in travel, and also delayed orders for goods is going to create a mini recession. And the big question is, how will the global economy recover from that? Will it be a long, slow, L-shaped recovery, or, as the Chinese are expecting, a very swift rebuild of global supply chains and the so-called V-shaped recovery? Well, it's going to be interesting to see what happens and how much deeper this crisis goes. But it certainly feels like markets are on tenterhooks. We have seen stock markets hit new records in just the last week, but now the mood feels significantly darker. People are seriously concerned about how bad profit numbers will be in Q1 when these come out sometime in April, May. The real issue, though, is can global central banks afford for there to be a market crash at the same time as we see either a long or short duration recession as a result of the virus? And my expectation is that global markets will not be allowed to go into meltdown. Too much has been invested by the global central banks in ensuring that markets recovered from the 2008 crisis. So I expect we will see global central banks enact what we call the global Draghi moment. People will remember Mario Draghi, then chairman of the ECB, telling markets that he would do whatever it takes to help recovery. Well, I expect that will happen again in order to avoid a simultaneous global recession alongside a market meltdown. Now, for investors, there are going to be tactical decisions, and these would take the form of investing in people who are selling goods effectively. For instance, Apple will continue to sell iPhones. It may be that a purchase in February is delayed till May because of shortages, but if you're looking at invested in airlines, a trip that you were planning to take next week is not going to happen. That's lost forever. These are tactical decisions on which companies are really going to suffer as a result of the crisis. But the issue for central banks is far more strategic. How do they avoid a simultaneous snap recession caused by this virus alongside a market meltdown?